On this episode, we're talking about the differences between a pre-approval letter and a loan commitment letter. Hello everyone, welcome to the Bob Walsh Show. On the Bob Walsh Show, we talk business, St. Louis, and real estate. Hello St. Louis, thank you for joining us. We have another good episode lined up. You're kind of a regular at this point. I don't know if an introduction's needed, but we'll go ahead and do it anyway. Scott Shafman with Cornerstone Mortgage is with us, always providing good content and good information to our viewers. And today we're talking about the difference between a pre-approval letter and loan commitment letter. I've touched on this on social media quite a few times. I don't know if we've ever done a formal episode on it, so Scott agreed to come in and talk about it a little bit. So Scott, thanks for coming in again.
Absolutely. Thanks for having me again. I appreciate it.
Now it's very, 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 very competitive out there right now.
Mm-hmm.
Most buyers get pre-approval letters.
Correct.
When making an offer,
Mm-hmm.
There's also another option as far as the financing goes, if you're financing, not paying cash, to make your offer stand out a little bit more, and that's having a loan commitment letter.
Sure.
I guess to start off, we'll have you just tell people specifically what a pre-approval letter is and what a loan commitment letter is.
Sure. So a pre-approval letter would be whether the loan officer took a application over the phone, or if a bank has an online application where you fill out all the information online. And some banks actually have these automated pre-approval letters, which me personally, I've been doing this for 15 years. I would never trust it. Something that was automated, especially with all the different variables that are involved from a financing standpoint and qualifying standpoint. There's no way any automated system, in my mind, can be 100% accurate when generating a pre-approval letter. It can't happen.
Okay. Now, did you have more to add?
Well, yeah, so pre-approval letter, so we get the information, whether it's the application's done online or whether it's done on the phone. And then from there, we go ahead and pull credit and then determine whether somebody qualifies on the loan based on credit, income, job history, employment, make sure that there's no employment gaps, and if there was a recent change in job, make sure that the title and the consistency is very similar from a previous job. So, and making sure that you got to make sure you ask the right questions, because a lot of people say that they make, let's just say, $50,000 a year, but if you don't ask them how they're paid, because if they're paid hourly or 1099 and they've only been 1099 self-employed for a year, that could potentially be an issue from a financing standpoint. So that's what a pre-approval is generated either through the phone or through an online app, and then the loan officer will be able to go ahead and then provide that pre-approval letter based on the qualification.
Okay, so essentially, pre-approval letter is just a general, based on a general conversation.
Yes, nothing, in my mind, nothing on a pre-approval letter, nothing's really verified. It's not like...
It's a good faith approval.
It's a good faith approval based on the questions that are asked from the loan officer and then the information that's retrieved from the borrowers. It's all verbal, okay? So nothing... It's not like on a pre-approval letter, I'm verifying actually with pay stubs and W-2s, trusting, I trust what this person is saying based on the questions that I'm asking.
Okay, and usually when you're talking to someone, and then especially if I'm referring you to a client, the trust is there, but the listing agent of the home, they don't, in a lot of cases, they don't know me, and they definitely don't know my buyer.
Correct.
So it gives them the security.
Oh, yeah, the pre-approval letter is still, it's very important, but just because somebody's pre-approved doesn't mean that they're going to qualify for a loan. Okay. So, and then I'll touch on what a loan commitment letter is. That's where we actually start the loan process based on, let's just say, we're basing the sales price at 250. We're basing it that you're going to put 20% down, and then we're actually processing and underwriting the loan.
Okay.
So the lender actually processes, underwrites the loan based on, purchase price of 250 with 20% down. We're going to start, gathering all the W-2s, pay stubs, bank statements, submit it to processing, and then actually submit it to underwriting, where the underwriter approves the loan, and then the lender can issue a loan commitment letter to financing. And I will touch on this real quickly. The difference between a pre-approval letter and a loan commitment letter to financing this day and age, with it being a absolute seller's market under $500,000. I think it's a buyer's market actually above $500,000
Right.
price range, but I'm not going to go there right now.
Right.
But if it's under $500,000, what's happening is offers are being made. New listing, there's 4 or 5 offers on the property, and if 4 of them have pre-approval letters and 1 has a loan commitment letter to financing, that seller and the seller's clients are going to 100%, in my mind, lean towards that loan commitment letter to financing, because the loan is already approved, where a pre-approval letter is just can be created very quickly. I'll leave it at that. Loan commitment letter financing takes some time.
All things equal, the commitment letter does give an advantage.
Huge advantage, especially in a seller's market. It's not a buyer's market. So you need to be able to have that. Any type of competitive advantage you can have going into putting an offer on a home is going to give you more negotiating power, 100%.
Okay. Now, really good information. How long is a loan commitment and pre-approval letter usually
Typically,
good for?
it's based on credit and income docs, so usually around 90 days. But
Okay.
it's really easy to update those things.
Right.
We basically just repull credit, make sure no new debts are added.
Right.
Credit score is still very similar. And from a verifying income, and we may need updated bank statements and updated pay stubs as well.
Okay. Well, cool. Well, really good information.
Great.
Thanks for joining us.
Absolutely.
A loan commitment letter does help set you apart
Absolutely.
from your competitors and your
100%.
Under 500,000, like Scott was saying, you are competing in almost every situation.
Every
these
single
days. So,
situation.
all right, everyone. Well, that concludes this week's episode. Thank you so much for joining us. Goodbye for now. See you next week.
Thanks, Bob.